Tonight, companies behind the most widely traded digital token, Tether, are coming under fire tonight after reports they used falsified documents and shell companies to get bank accounts. Bitcoin falling to a 2-week low today as investors weigh concerns around regulation and the fallout from Silvergate, which tonight said it would suspend its Silvergate exchange network. Mackenzie Sigalos joins us now from the Denver conference, a major crypto conference where over 30,000 people are registered to attend. Mackenzie, it's good to see you. I've got to ask you, you're in Denver at a crypto conference, and it just feels like the mood at a crypto conference after the year they've had. I imagine a lot of heavy drinking, maybe some weeping, but you tell me what's really going on there. What's the scene?
Hey, Eamon. So yes, we are in a crypto bear market, but people on the ground here in Denver are really excited and they're focused on building. So we're talking about everything from decentralized social media platforms to tools that are being used by activists living under autocratic rule around the world. So ETH Denver is one of those conferences that really is focused on drawing in all the major developers and cryptographers from all the big chains who are trying to solve for these problems. You've got a mix of institutional names like Coinbase, Robinhood, and Alphabet, as well as some of the newer and smaller players. It also dovetails with one of the biggest hackathons of the year, which is part of why you're also seeing VCs coming to town, Sequoia, A16Z. They're looking to check out this new talent. Another one of the big topics is this major Ethereum upgrade that's coming up in less than 2 weeks from now. It's going to make it possible to withdraw staked Ether tokens. Now, that's a big deal, because folks on the ground here tell me that once it becomes clear how your money can come out, and it's been proven to work, they expect a significant influx of capital to come onto the Ethereum network, which may ultimately move the price. So a lot of excitement and a lot of talk about very specific technological terms here, Eamon.
Yeah, but there's a lot at stake, too. And so talk to us about this Tether situation, because this sounds a little spooky. You're talking about shell companies, potentially falsified documents, a lot of allegations flying around. You wonder if this is going in sort of an FTX direction, or if, as the company says, you know, really nothing to see here. Explain what's happening and why we should care, really.
So the two companies behind Tether, which is the world's most popular and widely traded U.S. dollar-pegged stablecoin, are accused of essentially falsifying documents and using shell companies to get bank accounts. So we're talking about two companies. There's Tether, which is the parent company to the stablecoin of the same name, and then its sister company that runs Bitfinex, which is one of the world's biggest crypto exchanges. Now, in 2018, both companies were having issues maintaining their access to the banking system, and to get around this, the Wall Street Journal found that both companies started using these shadowy intermediaries, so think of like third parties, such as other businesses or individuals, to open and maintain bank accounts. The report went on to say that they circumvented the banking system by providing fake sales invoices and contracts for deposits and withdrawals. That Wall Street Journal report, Eamon, also specifically references an email in which the co-owner of Tether Holdings pushed back against the use of these fake sales invoices, saying that he would not want to, quote, argue any of the above in a potential fraud and money laundering case. Today, we did hear from Tether's chief technology officer, essentially saying that the report contained a ton of misinformation and inaccuracies, but didn't really specify what the issues were with this report.
Wow. A lot going on. Mackenzie Sigalos, thanks so much in Denver. Enjoy the rest of the conference there. Appreciate it.